Yes, sir. Yes, sir. Yes, sir. Hey, welcome back, people. Here we go. Starting it off. Just giving us our little what they would call our pregame pep talk. The week ahead of us is going to be one that I can already tell you right now is going to be a volatile, unsettling week. Like I said, I mentioned everybody else. Hey, having your money on the sidelines is not a bad thing. You are still a ape, whatever you want to call yourself, retail investor. But what we doing over is trying to be retail 2.0. Just know the week ahead, if you are holding stocks in the financial sector, really any sector, are liable to go up and down, especially those that are driven high with retail or that have a lot of this fraud streak going on. Let's tap in. I got a video right now that's kind of giving us a little pre-talk about the damage that's occurred. I mean, not even occurred, but has played out over this weekend as far as the bank collapse, the debacle of, like I said, I got key points we'll be talking on at the end of the video with Credit Suisse and who's supposed to be backing them and the contingencies and all this stuff like that. But let's tap in those video and then let me get these keynotes at the end here. Let's get it.
Well, bank stocks got rocked this past week, and investors are looking to the Fed for where interest rates are headed. RBC Capital Markets head of U.S. equity strategy, Lori Calvasina, is here with what to expect next. Lori, will the Fed raise rates this coming week, and what do you think investors want to hear?
So, look, I think our economist, Tom Porcelli, put it well when he says it's a game time decision. If things are fairly stable, he can see them going and doing 25. He thinks 50 is probably not going to happen. But if things continue to be volatile, they might decide to go ahead.
Keynote in here, guys. Like she said, it's a game time decision. Y'all, as we mentioned in the last video, and we'll keep mentioning it, guys, this is a black swan event. This is a double-edged sword. You got to make one decision that's going to allow the other a problem to manifest. You got to handle the other problem and let the other situation manifest. But either way it goes, this is a bad situation, and feds are between a rock and a hard spot. Everybody's between a rock and a hard spot.
Ahead and take a pause. And there's actually, it doesn't seem like there's a lot of time until that meeting, but there's actually quite a few days.
If the Fed does go slower from here on rate hikes, does inflation continue to fall? Is that inevitable now?
I think so. And, I know people get very caught up in this category, perked up a little bit, didn't come down enough. I think that we've clearly seen the peak in inflation. It may be a bumpy path downward, but I do think all the work the Fed already has done is going to take some time to filter into the system. But I think that medicine is in the process of flowing through the economy's veins.
What do you think about U.S. stock valuations right here? What's a reasonable expectation for returns for investors?
So valuations don't look bad. They don't look fantastic either. And there's a lot of uncertainty because there's a lot of uncertainty about where earnings are going to end up. But even on my below consensus numbers, I think we're still pretty reasonable for this year.
How would you say below consensus? Far below? What do you think?
I'm at one.
Look, what you guys, just keying on that. Yeah, below consensus, guys. So like we said, guys, this is not just meme stocks, retail stocks, anything. This is the entire market is sliding. Guys, this is what we call a crash. Believe it or not, these are the symptoms of a start of a crash. We've been in a downtrend for the last months here. Things are boiling over. Money which already had no value before, guys, they stopped backing money by gold is when people should start having their eyes up. But now what we're going through with this mass printing thing right now, money's like a situation where every other country's running away from us. They don't want to have their hands on it. We're fluffing this up with, everything's fine. But like I said, we got keynotes at the end. But just listen to the wording that's being used. Like it's kind of like a thing where they're saying it, but they don't want, people to start going out into a panic. Which is already happening.
Around 222. So even on my numbers,
that's a big difference.
Yeah, even on my numbers, we're still reasonable. We don't look fantastic, but we look okay.
Okay, and does that anticipate a recession? I mean, that sounds like a pretty big difference.
So we think that if you go back and look at stock market pricing in October, it already baked in a mild, short, shallow recession that takes place in 2023. I think the thing that could take valuations lower, and this is not my base case, but this is the risk, is if you end up seeing a recession in 2024. I don't think that's been priced yet.
Are there parts of the stock market that are more vulnerable than others to missing on earnings, which I guess is a roundabout way of saying what would be your favorite sectors to invest in right now?
So I think the tech space is really interesting right now. We've been overweight that sector because we wanted, frankly, to keep our toes in the growth trade. I think earnings got de-risked there largely last year. I think the value sectors, things like energy, financials, even before this banks blow up, I think those areas are kind of the last dominoes to fall. Earnings expectations were resilient last year. Now they've got to bake in some pain.
Dare I ask about banks? What do you think?
So we've liked the banks, and obviously we didn't anticipate what's unfolded over the past week. Our banks team does think that this is a fairly contained implosion. We'll wait and see on that. I think if you're a longer-term investor, of course, whenever you have big dislocations like this, there are always opportunities. If you're a shorter-term investor, you probably need to wait and see.
Say, hey,
I know you've done
pull your money back
in the past on small caps. What do you think now about large caps?
They won't just say it straight out.
Look, I think in the very short term, large caps have an advantage because they're more biased towards defensive sectors and growth sectors like technology. Financials are really being more of a drag on the small cap space right now. Small caps are more cyclical.
Throw my XRP
so while we
in
have
there
these fears and this risk-off moment,
the
it's
last
a tough
thing they
place
start
to be,
screaming.
but the
Crypto,
valuations still look fantastic. So I think if we keep that 2024 recovery thesis on the economy intact, you're going to want to be adding to small caps in here.
Adding money here. And layoffs seem to be creeping up. Are you concerned about the effect on the economy there?
So I'm comforted by
we got all
the
the
fact
stuff
that
ahead of us for next week.
Layoffs are basically non-existent. Industrials did most of their layoffs in 2020 around the pandemic, as much as we saw in the GFC or the tech bubble. So that's going to give this economy some resilience in here. But outside of that, we are starting to see areas like media, financials, healthcare, consumer products pick up. Frankly, that's what we expected to see even before this banks issue, simply because we are starting to see the labor market deteriorate a bit. Frankly, it's probably better news for investors that it's getting started sooner rather than later.
Do you see any mistakes out there that you think investors are making right now that they should know about?
So look, there's a big rotation out of value and into growth this week. That makes sense given what's happening to the banks and interest rate expectations. But there are some babies getting thrown out with the bathwater.
Y'all exposed yourself.
Industrials have been getting hit pretty hard. Energy stocks have been getting hit pretty hard. There are cyclical concerns there, but they really have nothing to do with what's going on in the banks.
What about crypto? How's that been lately? All right, guys. Let's tap back in here. Let me just pull this up here so I can get this thing will. Come on, Billy. All right. But now, anywho, just to tap in here, and I could actually pull this down here because this is what, also check this out. Study finds 186 banks vulnerable to SVB-like collapses. All this to tap in, guys. I just want to get everybody prepared for the week ahead, guys. We are going into... this is not predicted. Anybody that's coming out telling you this is how it's going to go, or the AMC price, 8 price is going here, they have no idea. There's no way to know. This is the arc of a black swan event. This is what I was screaming about now. And I just want to keynote into everybody here. Listen, remember, this is what we wanted. You wanted a black swan event. A black swan event is what happened 2 years ago. Black swan event is something completely unexplainable. They didn't think about it. They couldn't pre-plan for it. That's what puts people in, like I said with my last analogy, the tournament. Now we have to actually play a real game. Now it's 1v1. Now it's my blows are hitting like your blows. All right, this is, but again, that doesn't just mean for hedge fund. That's everybody. Everything that you see around you is going to be going into collapse. Everything's imploding around. This dryness that's being felt is happening in the economy too. So that means be smart with your investing and strategy. Understand also the markets are about to slide. Any previous supports and things like that we've locked in on, we've got to see how this week is going to go. So don't go by last week's prediction, thought of where your support is. Like I said, AMC, keep your eye on that $4 mark. Obviously, we want to see that bounce off that $4.380 mark. But again, we possibly expect that it could possibly go lower or it could go higher. With AMC, the safety of it is the fact that there are no shares available. On the flip hand, which again, there's two different occurrences, so there's no way to say which one you should hold, AMC or APE. I'm holding a little bit of both now at this point, right? Just so I could have the best of both worlds. But APE this is where I expect there to be some possible downside. There's nothing holding APE up. And that doesn't mean that we're not going to have your run up in it, but just understand that for those, if you have your money on the sideline, this could be an opportunity to sell now and catch APE a little bit lower, because I expect them, especially with the way this black swan event is occurring, with them getting burnt up. And then now we have this overarching theme of where it's seeming like that vote on the 27th of April will not be as straightforward, as easy as these funds think. They're going to have to try to push 8 down. They got to try to get out, right? Because the whole point of buying 8 from them was they thought they were going to be able to easily slide through and do that 10-for-1 conversion in AMC. Well, now that's being prolonged and the economy's blowing up. The pockets are getting smoked. So you got to expect that They're about to start dropping some weight off on these things. That doesn't mean they're going to drop out of the shorts on AMC, but they can't, right? AMC is the trap book. So if you're going to hold one or the other specifically, right now I would say, hey, look at your AMC. And if you're holding APE, just be prepared. There's going to be a ton of volatility this week with APE. AMC short interest still sitting at 24.39% going into this week. Cross borrow still remains completely high and has been ranging this month from 170% all the way up to 400%. People get ready. I mean, it's about to get insane. We got the Trump arrest scheduled for Tuesday the 21st. That'll be March 21st, 2023. Which is expected to cause an uproar in the nation's, I got this written down, uproar in the nation's political sector. MAGA protests expected. A lot of showings are expected. Like I said, Trump is, the main course behind this is that Trump is having a misdemeanor offense, which was basically they're saying that he paid hush money to the I don't know if you can say it, prawn star, Stormy-Daniels. And basically they're alleging that, that was paid hush money to keep his name from getting washed in the election against Hillary Clinton, which again, don't get me wrong, it's politics. So all that stuff, had they gotten out, they would have probably tried to, dissect him just like he dissected Hillary with the emails. But they're saying he paid hush money to her for her not to say anything about their affair, right? Or alleged affair. We can't even say it so. But now that's being brought back up and it's being upgraded to higher charges, as well as they're trying to stamp him with inciting violence for that riot. So all this stuff, again, is alleged. They're not expected to even have him in handcuffs, which we still got to keep our eyes open. If they put him in handcuffs, that would be a massive political blow and political shift. You're talking about the craziness, the demon that would be unlocked from that. So they aren't expecting that, but they are still expecting to have a what's it called? Mug shot and then fingerprint. But like I said, we've got that in loose. So you've got literal political reform and agenda about to, spark up and explode. Come that day, tensions are going to be very high. Markets might be shut down. Guys, this is a massive event. And then the day following, right after that, the FOMC meeting, which will be Wednesday the 22nd, where they're having expectations to hit with another 25 basis point hike. Banks are and hedge funds are all screaming, no, listen, we can't have another one. Bring it to a zero. We can't handle it. This interest rates are smoking and imploding. All those bad money, overextended, over leveraged. These funds and banks that were betting on highly volatile, risky plays are getting smoked right now and it's going up in flames. And again, the Fed has a decision to make, people. And tell me which decision they make. It's either they stop with the basis point hikes, right? Rate hikes, and allow inflation to run away into hyperinflation, which is already peaking up, guys. The way this is bubbling up, they aren't controlling this. This thing is still arcing up. We came down and we're going right back up right after it happened. Or they have to continue to put these hikes in. And that effectively keeps imploding and smoking the economy, which is what we're feeling out here, which is what you're like, oh, okay, exit however much. Cars, the housing market is now finally starting to slide down. When we say finally, we saw it starting to, the end is starting to, now she's starting to curve down. Banking sector up in flames. The people are running by the boatload, which I put down there again, to the crypto markets. If you're going and tapping Bitcoin, XRP, we scream it every single time. Cardano, guys, now is the time. This is the biggest generational wealth traps that's occurring up on us. We're in a Black Swan event, Like I said, double check in. Bitcoin is up, I think, around 27, 28,000, which is the high, going back up to its highest points for the last like 6 or 7 months. All your cryptos are coming out of the crypto winter, starting to curve up. Now is the time, people. Y'all, what they say, when people are fearful, is the time you should be greedy. And when others are greedy, it's the time you should be fearful. Everybody's fearful. Now is the time to set up Tesla, XRP. Again, like I say, 10 to 15% of your portfolio should be in what we call our movers, our momentum, our meme stocks, all of that, just because 10 or 15% can get you there, guys. Don't sit up and try to make $1 billion off of one play and have everything in sitting up in a risky asset play. pull out. You only need, $2,000, $1,000 go a long way on $2,000 go a long way on AMC right now, because remember, people were buying this, including me, at $50. I bought it at $7 and $14 on the initial run up, but I was still adding in at $40, $50. I remember how many shares I had before I started selling some down. I can get those. I mean, Jesus Christ, the amount of money that I had in there, that's a specific point. You can rebound and buy that position. If you felt like something was going to happen then, now is the time you can do it, and you can do it where you reorganize your portfolio. But these plays where Elon Musk, Tesla, oh yeah, the greatest meme stock, with the greatest meme stock leader, oh, don't forget, that's the original short squeeze. We want Tesla-like short squeezes. But nonetheless, that man is taking over. Crypto is the next move. This dollar system is done for us. It's toaster strudels. Tapping in last couple points. Be careful, like I said, of the financial sector. If you're placing trades in those banks, just be careful now. This week coming up is not going to be one to play with. Mark my words. And then we got the UBS offering $1 billion for Credit Suisse. Now remember, guys, that it was supposed to be the Swiss National Bank that was supposed to come in. It's funny how somebody else having to come in and buy it up. But they're offering $1 billion, which don't seem like enough to do nothing. Maybe it might be 100 billion, but I think it's 1 billion. But they're doing it under contingency. Already asking, they're saying that they're only going to buy that bank if they are guaranteed to have no loss. They're already asking for pre-bailouts. Basically said, hey, if we do go in here and try to take this bank, we want a proof in, not in proof, but guarantee that we're not going to go down with this. Guys, the political and financial climates are a wasteland right now. Everything is up in smoke right now. This is where you make off like a bandit in your certain places. The best time to invest in those hardcore assets and stocks, and as well as set yourself up for our swing trades. I look at our retail sector of our meme stocks like swing trades. I do not look at AMC as a long-term hold forever. No, I want my pay out of this. I came in originally for a short squeeze. Now I'm coming back to get my money back. That's basically the rendition of it. But keep your eyes on a pivot. This is not the time to play around. I keep saying it. This is getting real. But this is what we wanted. This is what everybody wanted. We wanted Black Swan, but we wanted tightness. We wanted margin calls. Wait, here's the next best step. This is better than margin call. This is called a money gone. That's what this is called, the money gone. Hey, the money's gone. That's what we've been looking for. Hey, guys, I appreciate all the support. Hey, if you're enjoying the content, hey, make sure that you like and subscribe. I gotta say it one more time again, y'all. I appreciate the support. I love the comments. Y'all use that comment section. Tell me what you think. Tell me if you feel like, if you're feeling similar to how I'm feeling about the fact that we're in the arc of the Black Swan event that we've been asking for. We're in the arc of the true tournament, right? Where we're going against the pros right now, right? But it ain't all eyes are here. There's nowhere to play. You can't land off. Hey, can I borrow this from you? And Terra's having to drop shares a day after. Cost of borrow going up. It's getting stupid to play this game. And as everybody's watching out here, ain't no money for bailouts right now. So these hedge funds are sitting back saying, wait a minute. We playing a stupid game and everybody else started using up all the bailout money. Just tap in, guys. It's going to be these upcoming weeks are going to be one for the books. But next week, or this week that's coming up right now, starting on Monday, which will be March the 20th, get ready. All right, people. Hey, as always, a pleasure. Yes, sir.